Welcome back, investors and traders. Jeff here with another video. And so right off the top here, guys, do want to apologize. Has been a little while since I've uploaded a video. Been very busy with some projects away from YouTube. I have been keeping up with my course, Trade Alerts Pro. Have been updating daily and weekly in the course, but unfortunately been too busy to upload videos. And now I'm back to where I have a little bit more time. And I'm really excited about a couple of stocks. I could probably belt out maybe 9 or 10 different videos of stuff I really do want to talk about and get out there right now. But I'm going to start with BLNK Charging, ticker symbol BLNK. Now, any of these stocks that are related to the EV market have seen a lot of propulsion over the past 1 year. As you can see the chart here, I have got 1 year chart pulled up on BLNK. This was a $1 to $2 a stock, basically lifeless around a year ago. The market cap was hovering somewhere around less than $100 million, I do believe. Seen a little bit of movement here in February, and of course, dived with the rest of the market when the COVID-19 pandemic hit here in the United States, and it traded itself back under a dollar, got down to $1.30, $1.20 a couple times. Now it has itself up over $23.50, and this sector is booming. It's really the force of Tesla. I do believe ever since Tesla has really taken off, you've seen BLNK Charging and NIO, many of these EV related stocks really growing, and this is a company I've become very, very interested in. And obviously, if you would have bought stock in BLNK Charging a year ago, you'd be up around 1100%. Perhaps would be a good opportunity to sell some. What we're going to talk about in this video, we're going to talk about what it is BLNK Charging does. How long have they been around? We're going to look at earnings. We're going to look at short percent of float. We're going to look at all kinds of different metrics to decide if BLNK Charging is really worth investing in. We're going to take a look at its market cap, and I'm going to try to help answer the question, is BLNK Charging headed to $50 per share from here? Before we do get started though, please make sure to drop a thumbs up on this video. I appreciate all the support, and make sure to subscribe to the channel if you have not done so already. All right, so let's take a minute and talk about what it is BLNK Charging does as a company, okay? As you can see right here, this is a BLNK Charging port. I will show you the map to BLNK Charging where they have set up all these different charge stations over the United States. And let me try to give you the best quick analysis on what this company does, okay? So this is leading the EV industry since 2009. BLNK Charging come on to the EV market around 2009. Obviously, that was way before we have really seen the big move in the electric vehicle market. BLNK Charging is a leader in electric vehicle charging equipment. We have deployed over 23,000 charging stations since we began in 2009. As early adapters of electric vehicles, we become strong amongst the largest owner and operators of EV charging stations. So obviously, let me just stop right there. This does seem like a very investable idea, and really that's going again regardless of earnings and those type of things, is that this company is really trying to dump their resources and their money into the future, okay? Now the stock has not seen very much growth since 2009. We'll get back to that in a minute. Actually spiked up really, really high back when they first IPO'd, and has seen a big downtrend since that time, and now they're starting to recover slowly. Still under $1 billion market cap. That's why I think it might potentially be a good investment, a high risk investment, but a stock worth keeping on your portfolio and perhaps investing a small amount of money in. We understand what it means to drive electric and use EV charging stations with a free BLNK membership. EV drivers can access publicly available BLNK charging stations and enjoy discounted charging rates. We're committed to making the decision to drive electric more accessible and more appealing. And right down here, they kind of list off some of the perks of being a BLNK member. Obviously, you're going to save money. Becoming a member is quick, easy, and free. Get 20% off or more when charging any of our public locations nationwide. Easy management. You're charging in real time. Your account and the BLNK map show real-time station status, charging activity, and more. Tracking your progress. Be proud of your clean energy. Your BLNK dashboard shows pounds of CO2 reduced, barrels of oil, and even dollars saved. So what they're doing is they're comparing your progress as an electric car owner to somebody with a gasoline engine, right? Barrels of oil not used, dollars saved, and obviously, like I just mentioned, CO2 reductions. Now, this is another thing I think that may potentially make this a very good investment, is their home charging. They have extra savings from the comfort of your own home. Members save when they purchase a BLNK HQ 100 home charger. So they do offer home charging stations as well. Let's take a look at the map and how they have spread around all over the United States right now. So this is a comprehensive map of all the BLNK charging stations that are currently installed here in the United States. As you can see over here on the West Coast in Washington and California, looks like Las Vegas, Phoenix, some of those areas even in Texas, they're heavily installed. Then there's this big gap over here to the Midwest, and you start seeing more in Wisconsin, Kentucky, Tennessee, Alabama, Georgia, Florida, and then very heavily spread out up here through the East Coast, right? Now, if you want to take a closer look and see if there's any BLNK charging stations in your area, obviously go to the website and find the BLNK charging map, and you can research this further for your own needs or just your own interest level. You know, I'm the kind of guy, I'm a very interactive investor. I want to know about the stuff I'm investing in, so this kind of stuff interests me. I'm the kind of person that would want to go seek out, try one of these things, check out the technology a little bit, see how effective it is, those type of things, get some opinions from different people. I have that constant tinkering mindset. I cannot just invest in a company and that be that. I have to continuously search it out and learn more about it and educate myself further on any of these type of subjects. As you can see, they are putting up a lot of charging stations here in the United States. They're popping up more and more, and this is a growing company. One of the BLNK charging stations is the IQ200. This is designed with the future in mind. The IQ200 is a fast level 2 EV charging station capable of delivering up to 65 miles of charge in an hour. From its sleek plug and play design to its advanced internal technology, it's an industry leading product. Now, what I'm going to encourage you all to do from here, guys, like I mentioned, go to the website. It's blinkcharging.com. Come around here and you can browse around some of their products. They have a complete cloud-based network. They have mobile emergency charging stations. And even though I think this company right now is probably spending themselves into what I would call maybe a poor financial situation, this is the type of growth company, maybe very similar to Plug Power, who's going to take some losses right now, but they're very focused on the future. And perhaps this could be a very, very good investment. Now, I will mention this right here in this part of the video. If you're going to invest in a high-risk company like this, I do consider BLNK Charging a very high-risk company. Do not be putting large sums of money into this investment. Just the same with Neo and some of these other companies, Plug Power, some of these other companies we've covered here on this channel. Make sure you're playing these positions a little bit more conservatively. You know, for us tech investors, we're going to put the large amount of money in proven companies that have proven earnings and that are going to be very reliable on an earnings report and on a balance sheet, things we do not have to worry about as much. Some of these high-risk companies, they might hit really good. They might fall really far. A lot of them go bankrupt. Those type of things we do not know until the future brings us the situation. So if you're going to invest in some of these high-risk companies, I highly encourage you, do not use large sums of money. Also, with that said, do not be afraid to invest in them either. A couple $100 or a couple $1,000 into a high-risk company can prove to be very beneficial to your portfolio in the long run. All right, so now we've taken a look at what it is BLNK Charging does as a company. We've taken a look at some of their growth, but now we need to see if the growth in this company is a benefactor of being a part of the EV market, or is it earnings and fundamentally related, okay? Now, I think as you see this unfold a little bit, you're going to see a lot of similarities to some of the high-risk companies that we do play and we do invest in here on this channel. Back on November 12th, BLNK Charging shares reported earnings. They dropped 8% after Q3 misses, and that is due to pushed out orders. And as we can see here, the shares plunged 8.4% after hours to $9.55 after Q3 results missed top and bottom line estimates with a $900,000 and a 12-cent loss respectively, okay? However, product sales did increase 74% to $600,000. Now, as you all know, I'm probably guilty of this too. We look through these earnings reports and we see, hey, we're seeing growth in the product sales, but we're seeing losses and we're seeing misses on earnings. This is very, very typical of a startup growth company. And even being 11 years old, this could still be considered a startup company, okay? Simply because the real gust of wind behind the EV market has not quite hit yet. Really hit in 2020, like I said, with Tesla and Neo. But these products being extremely useful, that time has probably not approached till now. The company says 668 EV charging stations were sold, deployed, or acquired across 25 different states. Their cash total of $14.9 million at the end of the quarter. And here is something that was mentioned from the CEO. Our momentum continued during the third quarter of 2020 despite the ongoing pandemic, which included challenges with logistics, shipping delays, and a decrease in driving patterns impacting utilization. Our continued growth has demonstrated by increased revenue driven by significant increases in product sales. However, the quarter's revenue was impacted by the timing of certain orders that we now expect to be completed in the fourth quarter of 2020. That yet remains to be seen. Let's take a look at their numbers. And again, if you're investing in this company because of earnings, guys, you're doing it all for the wrong reason, okay? The EPS missed by 2 cents. They missed on revenue by $73,000, and their projected earnings were about $900,000. And the guidance was really not high enough to pull the stock up. Now, ironically, since that time, since November 12th, when they did report earnings, the stock has went from roughly $9 or $10 up to well over $30, and now has settled itself back down around $22 and $23 per share. So you could have made well over a 100% gain buying this stock on bad earnings. That's kind of the power of the EV market right now. I just want you all to be aware this is not really earnings driven, and it's fundamentally not a very good company. We're going to take a look at that next. Alright, so let's take a look at some max charting on Blink Charging. As you can see here, it really hit the market back in January of 2009. So it's got about 11 years on the market, a little better than 11 years. We're about to hit 12 in this upcoming year. And as you can see, this is on a reverse split basis. It was up at one time over $3,500 per share. Again, I have no idea what the actual value of this company was at that time because it is reverse split since that time. So none of these values are accurate, but it really seen some highs here in late 2010 and then has pretty much been all downhill since 2011. Okay, this stock even got down as low as $1.20 multiple times. We've seen some real lows, some real opportunities in 2019, 2018. And then over the past 3 months, as we talked about, has came from $5 and $6 up over $37 per share, hit a 52-week high of $34.67, and now is leveling itself back off. Right now, currently has a market cap of $772 million. So if this company really does have any type of future, $772 market cap is actually very, very cheap for a growing company. Not even $1 billion market cap. And when you compare that to some of its adversaries and some of the companies in the EV space, it's very, very inexpensive, still here even at $23 per share. So might be a great opportunity. Again, like I said, it's just very, very high risk. And perhaps if we have some really good numbers on the next earnings report, this company is starting to show some real growth and some real improvements towards fundamental soundness, you could probably see a very big move in this stock. But all right, so when I say this is not really when I say this is a very high risk position, what I'm talking about mostly, obviously, they have negative profit margin, negative operating margin, they have no return on assets, negative return on equity. So basically this company does not make any money. They do not make any type of profits. They're basically just spinning their wheels to keep operational at this time. And a lot of great companies have started off this way. That's kind of the point of investing. You buy when it's extremely cheap and you sell a stock when it gets very, very high. I just want you to be aware, anybody watching this video, be aware of the risk. There is potential this type of company could go under, especially with these massively big profit and operating margins, very, very highly negative. They do have about an 18.4% quarterly revenue growth, which is good. The revenue is growing, obviously not profitable. And this stock is very, very heavily shorted, about 18% short percent of float, roughly 14% short percent of shares outstanding. And guys, what that really translates to, a lot of people are betting on the EV market to fail. And there's probably even more people betting against some of these highly speculative stocks. If you want to look across the board, Tesla is becoming a lot more safer of an investment. a lot more of a larger brand, recognized worldly, and even NIO is kind of moving into a little bit safer of an investment now. This company very, very unproven, and so obviously a lot of people are going to be shorting it, and I'm sure there's going to be money to be made on the short side of this stock. And the balance sheet is really not that bad. They have $14 million of total cash and $1.6 million of total debt, so they don't have so much debt that it's weighing down their balance sheet. However, down here at the bottom, their cash flow statement, obviously why they don't pay dividends or anything else, they have negative $13 million operating cash flow and negative $8 million levered free cash flow. So this company right now, be aware of the risks. So let's conclude with the video. Do I think Blink Charging is a buy? Do I think it's headed to $50 a share? I actually think it is, guys, and here's why. Is because the market cap is still very small, and I think with the overall momentum of the EV charging market, you will see growth in these type of companies. However, before I think about investing a large sum of money, I gotta see those earnings and those fundamentals get better, okay? This company has been taking 100% gains all year long, and if you wouldn't have jumped in at some point, like I said, down here when it was around $6, or back here in July when it was at $4 and $5, and then you can even go back further where it was $1. If you wouldn't have jumped in at some point, you're just patiently waiting on the sidelines forever. So my advice, wait for a little bit of a pullback. Like today, the stock lost over 7%. That might have been a good opportunity to take a small position in your portfolio and slowly build on it, okay? Just be careful and be aware of the risks. And as far as that goes, make sure you have Tesla and NIO in your portfolio before owning Blink Charging, because this is very highly speculative. So, but from here, I don't see any reason why the next big move in the EV market will not push this stock up to $40 and $50 per share. So we'll publish another video when that time comes, or perhaps on the next earnings report, any big news that comes out for Blink Charging, we'll try to keep up with it. So that's all I got for the video, guys. Thank you as always for watching. Make sure to drop a comment, leave your thoughts and opinions on Blink. I always do enjoy hearing that. And as always, have a very good day.